The following is a presentation of TFNN. It is now time for Trade What You See with your host, Larry Pesavento. Now, Larry Pesavento.
Okay, good afternoon, folks. If you have any questions, you can call in at 877-927-6648, and we will have to try to answer them if we can. As we've mentioned many times, we are over a major Bradley high, in my opinion. We'll see if it's going to work. I posted into the Tiger TV today the 5-year forecast for Bradley. It was going back from 2007 through 2012. And I had to shift it a little bit to get the whole thing to fit on 5 years, but I wanted to show you that overall, it does a pretty good job at picking the energy points, whether they're high energy for a positive market or low energy for a negative market. But you can see that it does better than most economists do. It doesn't work all the time, but it's fitting nicely right now. So you ought to keep an eye on it, because if we go below, I would say 13,500 in the Dow, that would pretty much tell you that the Bradley model is probably working, and we're going to be down for quite some time. What's interesting about this is that we have a situation now where the market has a decidedly negative bias from 2012 right now over this equinox that we're on. And also we have a Bradley date today, which is combust. We have Mercury conjunct the Sun. And then tomorrow we have the new moon. So it's going to be pretty amazing here if it's going to do it. Now, we did have another earthquake. It was only 7.9. Nobody was killed, so it didn't get much of a play in the news or anything. But it, frankly, was a pretty big earthquake. It was very... I think the one in Japan was about the same. Maybe it was a little bit more, I believe. But, it did a lot of damage and, killed a lot of people and caused a huge tsunami. But, they did come, near these high energy points. So we'll see if we have any more, or if that's just it. That's all we're going to get this time around. But we'll wait and see. It's just cycles. That's all we're looking at. But the thing is that we have a situation where we're looking at a Bradley model that is down into the next 18 months. I mean, it literally has some real negative bias here. Now, this comes at a time when today Goldman Sachs came out, and two of their big guns said that this was the best time in the world to buy stocks and the worst time in the world to hold bonds. I mean, I think it's a great thing that they give a chance to to tell that they think the stocks are going to go up now. But the question that I asked is, and they based this on some long-term studies. I mean, guys, it was a lot better to buy stocks in 2009, 2010, 2011, as opposed to buying them right here at 2012. Yeah, the market might go up, and it might go up for another 4 or 5 years, and that's always a possibility. And if it does, all of us are going to prosper. I think we're going to prosper no matter what, whether it goes up or down. But the main thing is why didn't they give a buy signal when the market was hey, maybe back in September, October, when we were making some major retracements. I just don't understand that. But it gets a lot of press, and that's why it's there. And remember, when anybody says anything, and that includes me or Tom or Steve or anybody else, remember that you're the one that has to take responsibility, for your decisions. It's not us. We try to give you the best information that we can. And if it doesn't work, and sometimes it doesn't. Believe me, you guys know that. You've been around here long enough to realize that some of your predictions work and some of them don't. But, you have to take the responsibility for it. That's why we always try to tell you, what your risk is going to be at any particular time. And that's why it's important to realize that you are in control of your own fate. You're the master of your soul, and you're the one that has to be able to, to really understand this. Now, I heard on Tom's show early this morning, a man was talking about Edgar Cayce, and I have followed Edgar Cayce ever since my days in college. And he's from Virginia Beach. Or actually, that's where his office is now. It's the Edgar Cayce Institute, where all of his writings. He was known as a sleeping prophet. He was during that time, before Nostradamus was really popular here in the United States, and of course Nostradamus is very popular now, but he was known as the Nostradamus of his era. He would go into a trance, I guess, or a psychological, I guess it was psychological state where he would make, most of his work was based on healing people. And he had a lot of problem with the American Medical Association because he was telling, these doctors, what was wrong with their patients long before, the doctor could ever figure it out. And he was very, very good at it. He has a library there that's filled with thousands and thousands of his readings, and he was incredibly good at what he did, and he did have a special power, and he was known as the sleeping prophet, and he did a lot of great work. And one of the things that I've read a lot of his books. In fact, all of the books that he's published I've read, but the most amazing thing that I remembered, and this was from my perspective only, and that is that Edgar Cayce, predicted that Atlantis would be found somewhere near Bimini, which they believe that's where it is. But he also said that the end of the world, as we know it, as far as civilization, will come when the Pacific Rim has all the underground volcanoes start to go off one after another. That Pacific Rim starts way down in Chile and goes all the way up through Alaska, and there's about 7 major underwater volcanoes there, and he said when those start to explode, that will tell you that that's going to be the end of the world. Now, that's no different than the one about the Mayans in 2012, folks. And the end of the world, if you start thinking in those terms, you're not going to have a very happy life because, we've been on this planet for at least 5 billion years, and to say that it's going to happen on December 21st, 2012, you're just being naive, in my opinion. So we'll wait and see. Anyway, we're back to the stock market now, and we'll see how we're going to act through this. But we're still at the 786 retracement in the New York Stock Exchange Index. As you know, that's the one that I use the most of anything, and we're trading almost exactly at the 786 retracement right now. Excuse me. If you get 1 second. We've made a beautiful Gartley sell pattern up in here, and over the past month since February, we've made a 5-point reverse point wave, which was a Gartley's symmetrical triangle that he liked as a pattern, and that was a really nice pattern to be looking at from the sell side. In other words, I'll bring this up into Tiger TV at the break, but mainly I just wanted to show that this is where we are, with the New York Stock Exchange Index. The other indices around the world, the Hang Seng, the Shanghai, the DAX from Germany, and the FTSE from the UK, none of those have broken through the ABCD 786 retracements to the downside. So as far as I can see, that the Bradley model is telling us that we're getting ready to turn down, and we're getting ready to turn down sharply, and it should be for quite some time. So this is what we're going to be looking at. And that's all. That's all I can say. I had a question from someone about the fact that the Nasdaq was up, and it was so strong, and it was going crazy to the upside, and that everything looked wonderful, and Apple should be trading at $1,000 a share, and maybe it will be soon. But frankly, all I do is I base these on the patterns that I see. And all I can tell you that they don't work all the time, but they do work a lot of the time. And when you have as many things happening right now that we have going in the market, as far as the number of people bullish versus the number of people bearish, the advanced decline line is not moving like it should be. The transportation is not broken out to the upside. The utilities have not broken up to the upside. The Nasdaq has been the leader, and it has been because of Apple and Qualcomm and a few of the others. But as far as the pattern in the Nasdaq, I wanted to show you an example that happened in 2010, October 2010. I was in Hong Kong at the time, and I was interviewed by one of the newspapers there, one of the financial newspapers, and they asked me, I had given some speeches there, and one of the reporters attended, and he asked if I could give an interview, and I did, and they wrote a really nice article in the paper about me, and I told them, and I thought that the Hang Seng was topping at that time. And the reporter said, my boss thinks that you're absolutely insane to put this thing in the paper because this market's going to go really screaming to the upside, and you're going to look very foolish. And I said, yeah, I've been foolish before. And I said, but this is just the pattern that I'm looking at. It's nothing more than that. And the market actually topped 2 days after the interview with the article, and it topped on the day that the article was published, in the newspaper and everything, and then the market did go down. But frankly, no one ever said anything like, gee, that happened to be right where you said it was going to be, and it really doesn't make any difference. It was just one man's opinion of what I thought was going to happen based on the work that I had done in the past. And this is nothing more than a probabilities game. If you think it's something more than that, you're being very naive, because this is nothing more than risk control and probabilities. It makes no difference of whether the market is going to go up or down. You're the one that has to take responsibility for it, and be very, very careful of what people say, because they have their own agenda on what they think is going to happen, and that's a very important thing to remember. And remember, people like Warren Buffett and George Soros and other people like that. Anytime they have their ideas of what they think is going to happen, many times it's self-serving. I've always posted into the room one of my favorite Warren Buffett charts going back to 1998. When he told everyone that he had about 20% of the above-ground silver that was available. Well, on that particular 2 days where he said that, which was in February of 1998, silver jumped about 20% in 2 days. But when the April Berkshire Hathaway report came out, they had no silver at all. He had sold all of his silver into that big rally, and that no one ever said anything about it. But that's exactly what happened. So remember that this is why things work the way they do, and it doesn't really mean a lot if you don't respect your own margin, not your own trading plan, and just use part of what people say and use it to your advantage. The reason why pattern recognition works, for me anyway, is the fact that it's a leading indicator, and all I need to know is that if prices are going up, there's more buyers, and if prices are going down, there's more sellers. That's just the bottom line. And, that's pretty much it. Now, someone has asked me a question about the accuracy of the Bradley model, and it does have an orb. In other words, it could be 4 days before or 4 days after. In March of 09, it was off by 5 days. The actual low came in on the 9th, and we were predicting on the 5th. This time it came in around somewhere between the 16th. I've said it's somewhere between the 16th and the 22nd, because we have so many astro things occurring at that time. There's just a lot of cycles occurring, not just the equinox, but we have the combust today. We have the new moon tomorrow. But listen, after the new moon tomorrow, we're coming into Thursday. If we close really strong into Friday, we got trouble. At least I have trouble. Anybody, we're going to take a little break here to pay some bills. 877-927-6648.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now. You you take a hands-on approach to managing your investments. And whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you seek to maximize your returns. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, co-host of The Money Masters with Tom O'Brien, seen daily at TFNN.com, author of Mastering Probabilities, a daily investment and trading newsletter, and teacher of the money game. Studies show that 3 out of 5 people are afraid for their life in trading these markets, and the number one reason given is fear of loss. Look, fear stands for false evidence appearing real, and the money game proves it. Lesson number 1, don't risk more than 1% of your trading capital on any trade. Why, you ask? Because 35 trades in a row where you risk 50 cents and make $1 are all you need to double your trading capital, versus the 230 losing trades in a row you would need to bring your balance to $100. Let me teach you more about the money game risk-free for 30 days. Go to the homepage of TFNN.com and click on my name, Steve Rhodes, for your 30-day risk-free trial. You were born to be a money master, and I'll teach you how.
X-Story Gold Mines, an NYSE Amex-listed company trading under the symbol XG, is slated to be the newest gold-silver producer in Argentina. X-Story is forecast to produce more than $250 million in bullion annually, beginning in 2013, at a cash cost of less than $200 for each ounce of gold produced. That forecast will make X-Story one of the highest margin operators in South America and a sector leader in the mining industry. X-Story has $50 million in its treasury, having spent over $60 million to date on drilling and engineering. The ultimate size of its Argentina discovery could be determined by year-end, as results from the 6 drills operating at the site are fully assessed. To find out more about X-Story Gold Mines and their exciting growth potential, click on their banner on the front page of TFNN.com or check them out on the NYSE Amex under the symbol XG.
This segment is brought to you by Great Panther Silver. For more information, just click the Great Panther Silver banner on the front page of TFNN.com.
Okay, folks, I'm back. This is Larry Pesavento for TFNN. If you have any questions, you can call in 877-927-6648. I'll be happy to answer them for you. What we're going to do now is to show you a blow-up picture of the New York Stock Exchange Index over the last 6 weeks. If you go into Tiger TV, you're going to see what is called a reverse symmetrical triangle. Wills Wilder, a fellow who used to do some promotion here in the United States, he lives down in New Zealand now. He brought this out as the reverse point wave is what he called it. He took it basically right out of Gartley's book. It is basically a symmetrical triangle, and all you're looking at is, when you're watching this, you're seeing 3 drives to a top. The first top happened on February the 7th, which was a full moon, and then we had another low on the 2nd. Then we had another high on the 3rd, and it's important that Wave 3 takes out Wave 1, which it did, and then Wave 4 takes out Wave 2, which also came in at a full moon, and then, Wave 5, we've already extended up to the 1.27, and we have the new moon tomorrow. So I'm assuming the new moon tomorrow is going to be high. Whether it's a new high or not, I'm not absolutely sure. Well, I'm never absolutely sure of anything, but, this is the pattern that we're looking at as far as if it's going to start down. But everything is set up. I mean, this is pretty much an ideal situation. It's a mirror image of what happened in March of 2009. And and if it fails, it's going to be pretty significant, because that means that the economy is going to be really good for a couple of years. And it's almost assured, if the stock market's really strong, folks, it's going to be really hard not to get the current president reelected. So that would tell a lot for what's going on with politics, I would think, too, because that's how Obama got elected. Is that the stock market crashed because of McCain was his running foe at the time, and of course McCain picked a governor from Alaska that I don't think, this was my opinion in politics, and I'm going to change the subject right now. However, let's just get back to the pattern itself, and that is this 5-wave symmetrical triangle that basically is also a 3-drive pattern. That was also out of Gartley's book. It was the 3-drive pattern was made popular by a man named William Dunnigan in the 1960s. He wrote the Dunnigan one-wave formula and the Dunnigan thrust method, and he showed how these one-way patterns on 3 drives to the top and 3 drives to the bottom, work so nicely. In fact, we'll see if this is going to, remain to be seen. But we'll have to, take a look at this in a few weeks to see if it's actually going to be working. Now, I am taking a break here from the radio shows for the next 3 weeks or so because I have some things that I have to do for the family, and I want to really focus on the short side of the market. If, in fact, we start down, I want to be ready for that. And I don't want to have any distractions other than my usual business stuff that I do. And I spend a lot of time preparing for the radio show, and that time I'm going to use, to look at trading strategies, basically, for myself and the hedge fund. So that's what I'm going to be doing. And I'll miss you guys, but, I will be back, hopefully. If the market goes up, maybe Tom won't have me back. But, that's the way that's the way things go. It's like the restaurant business. You're only as good as your last meal. Okay, one of the things I wanted to talk about just overall with the chart is the Dry Baltic Index. This is truly an amazing thing. If you would show me this chart that I put into the Tiger TV thing today that shows the Dry Baltic Index up to date through 2012, it's down near the lows of 2009, and yet the stock market, and especially the Dow Jones Transportations, has made a 786 retracement, and all of these things are, no one's paying attention to this Dry Baltic Index, and maybe this is one of the times where, it's just not working, and, it doesn't have any meaning at all. But, if you just look at the overall economics, that the shipping rates should be higher if the economies are good. And in fact, this is not the way it usually works, but there's a huge divergence here. And that's the main thing that I'm really concerned. What did I see wrong here? That maybe this index is really just calculated faulty or something. It's not. I would never traded it, but I always look at it just to see what it's doing. And the patterns that the index has are very good. I mean, I've watched the ABCD patterns in the Dry Baltic Index, and now we're making a double bottom at 2009. And maybe this thing is ready to turn up, and maybe all of the economies of the world are going to be okay, and we're not going to have any trouble. That's always a possibility. So if the Bradley fails, that's probably why it's going to fail, is because of the economies of the world picking up good. Okay, we've got to take a break here to pay some bills. 877-927-6648.
This is Tom O'Brien. If you want to get great trade setups in equity as well as the option market, come over to TFNN.com and test drive my daily newsletter, Market Insights, for 2 weeks absolutely free. Each trade setup comes with a profit projection as well as stop placement. Included in Market Insights is a Twitter alert service. This allows you to take advantage of intraday setups. Volatility is back in the markets. What does that mean to you? To me, it spells short-term opportunity each and every day. The days of trending up on lighter volume are gone. We have come off the highs with volume across the globe. Don't get caught in a complacency trap. Many of the indices have given back 2 months of trading in 1 week. We have a trader's market. You can take advantage of this traders market by test driving my daily newsletter, Market Insights, free for 2 weeks. Market Insights will give you the edge you're looking for in the markets. Go to TFNN.com under newsletter. Hit the Market Insight tab for your 2-week free test drive right here, right now.
In the world of financial markets, there's a new player in town with an exciting new way to trade the markets. Nadex now offers binary options as well as bull spreads in a wide range of indices along with commodity and Forex markets. With as little as $100, you can gain access to a new way to trade global financial markets while guaranteeing that your risk will always be capped. Nadex allows you to multiply your trading opportunities in ways never imagined before and access markets you once thought were out of reach. With short-term trading opportunities available, including binary options expiring each hour the market is open, Nadex allows you to take advantage of a variety of market conditions regardless of volatility or market direction. Now is the time to take advantage of this exciting new market. Don't let this trading opportunity pass you by. Open your account today by clicking on the Nadex banner on the front page of TFNN.com. Nadex, a better way to trade.
Put the power of the Chapman Wave methodology to work for you. No matter what market you trade, what time frame you trade in, or your trading style, the Opening Call, Basil Chapman's daily market newsletter, is bursting with the information and trades you need to become a more successful trader.
I've been using Basil Chapman's Chapman Wave methodology for several years now. His Chapman Wave can be used for any time period for not only equities, but futures, currencies, commodities. I've been also a subscriber of his Opening Call, which I find an invaluable tool to help me analyze the potential of the market each day. He gives you opportunities to go short and long. It includes recommendations on stocks. I strongly recommend people using the Chapman Wave, and I very, very strongly support the use of his Opening Call.
To find out more about Basil Chapman and his Chapman Wave methodology, and to get your 2-week free trial of the Opening Call, a $64 value, visit TFNN.com today.
Folks, turns out my best student became my best teacher. Steve Rhodes absolutely raised my standards, and I'll guarantee he'll raise yours.
Thanks, Tom. What I've learned is that if you want more, you must become more, and that transformation, folks, that occurs the moment you decide to become a master. Now, the quickest way to mastery is through immersion, and for 2 solid days in Denver, Boston, and Tampa, I'll create a new standard of wealth for those few trader investors who have a burning desire to succeed. At my Master Trader course, I'll teach you how to create the ultimate money machine. These are the best-kept secrets in the business. Roadblocks, folks. Dabblers give up when they first appear. Stressors last just a little bit longer, but masters expect roadblocks and achieve extraordinary results when they bust right through them. I have all the benefit of knowing the type of wealth creation that I can generate for you. You don't. That's why I'm making this unconditional money-back guarantee. If for any reason you're not satisfied with my Master Trader course, I'll refund every penny. That's right. I take all the risk, and you get all the benefit. Go to the homepage at TFNN.com and sign up today.
This segment is brought to you by Crocodile Gold. For more information, just click the Crocodile Gold banner on the front page of TFNN.com.
Okay, we're back, folks, and we have a question from Mike in New York. Are you there, Mike?
Yeah, hi, Larry. How you doing?
I'm fine.
You put up the Bradley model chart before, and I noticed that it was going up for the last year or two. And during that time, you were very bearish. So why...
Whoa. I haven't been bearish that whole time. You know, I've had some periods there where I was really bullish, particularly in October and December of this year, and November when we had the that new moon. I was very bullish at that time. Plus, you know, in July of last year, I was relatively bullish too whenever I had those patterns. I didn't stay short that whole time. I hope you didn't think I did that. I mean, if you subscribe to my newsletter, you know, you'll see that I have periods where I think the market's going to continue higher, which it in fact did. I haven't been bearish the whole time.
Are there periods when the Bradley model is going up and you can still be bearish?
Well, I'm...
Or would you
I'm
fight
not,
that? You know, and vice versa. I'm just a little confused.
Okay.
If the Bradley model, at least the picture that you had up there, it showed that Bradley model was going up. So
yes, that's right.
You can be bearish within that, or... and vice versa. I really don't understand that.
Okay, let me try to explain the way that I see it. Basically what I do is I look at the New York Stock Exchange Index, Mike, as the overall thing that I watch in the market. I don't look at the NASDAQ. I watch the NASDAQ, of course. I don't trade it, but I watch it. And the NASDAQ is being skewed by, Qualcomm and, of course, Apple. Those are the markets that are really pulling the index higher. But the New York Stock Exchange Index is still in a downtrend. And starting in January the 23rd is when I believe, I thought this topping process was going to start. And, it hasn't, gone much farther up from where I'm seeing it, and I think we're looking at something that's going to be really sinister to the downside, and that's what I'm looking at. I think that we're over a major top here, and I have to stick with that, and I'm going to be bearish until the market really gets above 13,700 in the Dow and above 1440 in the S&P. Then I'll say, yeah, the market's going to go up for another couple of years, I suppose. But right now I have to stick with this model and the patterns that are there, and that's all I can say.
Okay. All right.
Okay. I hope I answered the question, but I realize
I was just a little confused by that.
I understand. I've had people tell me that too. So, they ask me, why don't you just buy until you come into this high? And mainly what it is it's how much money that you have to risk, buying some of these breakouts. And I don't do much in the breakout realm. So that's the main reason.
Mm-hmm.
Okay, we'll see if I'm right. If I'm right here, everything will be okay. If I'm wrong, this will be a time where the Bradley model doesn't work. But boy, I'll tell you, it's really hard to fade it because it's got a lot of history behind it. And the good thing about it, Mike, is not many people even know what the Bradley model is, because it's based on the Astro stuff that people get scared of. But it's got a very good track record. You can go back and look at some of these things we posted into the Den, and I've done 130 years of research on it, and it has a really good high probability of predicting, what the market's going to do.
Now, it's just for the Fed announced QE1 back then. I remember there was a time when you were really bearish, and it didn't work. Was the Bradley model pointing up at that time, or
I don't remember that, but I remember that time at that particular time. The market had been in a really pretty broad trading range for a while, and I was trading, both sides of it. But at that particular time, I don't remember exactly. You'd have to give me the exact date, and I could go back.
It was a time when the cycles were coming in, and then after that, the market went up on very low volume for the next, 5 months. It was a very crazy time.
Well, it's always crazy, but I'll go back and check it.
It was right after the Fed announced QE, and cycles came in, and then we started going up for a couple months on very low volume, and
Well, I'll have to go back and check it because I really don't remember. Right. But if you had the exact dates, I might remember. But I will go back and check, to see it. But it's been following relatively well since last January, so we'll see what's going to do now.
Okay. Thank you very much.
Yeah, thanks for calling in, Mike. I appreciate it. And we will take a look now at the silver market because we have had an interesting thing. Oops, just a second. Oh, dear. I'm having a little challenge here getting these charts into the room. Okay, what we're going to take a look now is the silver market. We've had a pretty good correction off of the 61% retracement that came in on around the 1st of March. And what's interesting now is if you take a look at both silver and gold, we have a situation now where we've had very little rally. We've had just a very, very minor rally in gold. And I look at the gold market a lot more than I do the silver market because it trades like 5 times the volume, and there's a lot more players, in the gold market than there are in the silver market. But we had a very weak 5-day rally. And today, we've sold off a little bit. We came down hard. But the fact that we could only rally 5 very small days of rally is very, very important because if you take a look at the gold chart, the last time we had a 5-day rally, which was back on March the 13th, and there again, the market broke down, very rapidly after that. And this is the same type of thing that we've had over the last 5 days in gold again. Only this time the rally has been even weaker. So all it takes now is to gold to go below the 1635 level, and that's going to set up a price of about $50 to $60 lower down at the 1587 level, which will be the pattern that we've been waiting for quite some time, and that is the bullish Gartley pattern that would happen in the 587 level. Now, the problem with this is, folks, is that the the gold silver index is just looking horrible. It took out the lows of last January already, which is quite amazing. In other words, you can see how weak that index is if you take a look at it. And if you take a look at the major stocks in that, like American South African and Newmont Mining, they look absolutely horrible on the charts. And this is when stocks are going up. God forbid if stocks ever turn down, this would really be something really, really sinister to have happen. So we'll have to wait and see. This 5-day rally that we have here, if it doesn't reverse and we don't get above 1675 in the next day or two, that's telling us that we are heading down in the gold market to this level that we're watching at the 16. Well, actually, if we go below 1635, that would trigger a move to the downside, in my opinion, to the 1785 level. And silver has had even a less of a rally than what gold has had. So this is why you've got to take a pretty good idea of why we think that gold is still heading to the downside, at least on this particular move that we have. Now, if it gets above that 1680 level, then that would negate all of what we're talking about here, and we'll have to wait and see if this is going to be the case. So right now, this is what we're watching in the gold market, and this is hopefully what we're going to see occurring in the shorter time frame. We'll know in the next day or so if we go below 1635 per ounce in the gold, it's going to be bearish. And if we go below 1685 on the upside, it will remain its bullishness, and that's what we really want to be keeping an eye on. But frankly, these markets are they're looking very, very ominous, in my opinion. The price of Newmont Mining has been dropping rapidly. We had a bullish buy pattern back at 55. It never worked. It just dropped straight below that. We were worried about it because all of the other markets were rallying, and yet the Newmont Mining and American South African and the others could not rally to the upside. So this is telling us that what we're looking at here is a case where the overall market is telling us that it's going higher, but the stocks of the silver and gold are not acting well. So we have to assume that this is what we're looking at as far as lower price. That's all we can actually hope for. And I believe that we've got a chance to really get this thing moving to the downside if in fact the gold goes below 1635. We'll have to wait and see. But if you get a chance, you can take a look at that XAU chart in the Tiger Den, and you'll see that we did go down and we took out the January low of last year. We haven't taken out the October of the 11 low yet, but we're still very close to that. We're very oversold in all of these, so we could turn around easily in some of these things and move back up for a rally. But right now, it's the fact that this 5-day rally in gold, it's very, very ominous if you're long gold here. You've got to get the gold moving to the upside, and then you'll have a better chance to see if it's going to work in your favor. Now, another market that is getting hammered really badly and has been for quite some time is the VIX index. Everybody's talking about the fact that it is really no indicator at all, that it really doesn't help much in the market for as far as timing and things like that. But frankly, if you will take a look at this thing on a longer term basis, it really gives a pretty good idea of where the market's going to be going, and I believe that we are. This is another thing that we're looking at as far as we're down to where we were back in April of last year, folks, and that was a tremendous topping market in the in all the markets, and we're back to that same low again. So we got everything set up for this market to go lower. If it doesn't go lower, then the guys at Goldman Sachs are going to be right, and they'll still continue to do God's work, and we'll see if that's going to be the case. Now, someone had a question about the copper market, And copper, goes along with the economy quite a bit. And we had some big patterns completing in copper not too long ago. And I will put into the Tiger TV the chart for copper. And, we're still up against this long-term pattern. If you'll bear with me just 1 second, and I'll get this thing done very, very quickly, and we can take a look at it. And copper is still pretty much in a downtrend. The problem is that, it has not exploded to the upside like the rest of the market, and it did not go above the 61% retracement of the previous high. And I think that's an important thing to take a look at. And I'm trying to, just give me 1 second here. I can't do two things at once. It'll be a little challenging at my age. Hold on. And we'll take a look at this copper, and you'll see that we didn't get above the 61% retracement in the copper, which was at 395. We've been there for well over 6 weeks. We have basically a little pennant forming now between 397 per pound and 370 per pound, and we've had 3 lower tops here now, so that's indicative of a market that wants to go a little bit lower. So this is something that you want to keep in mind. And the copper has not also broken out to the upside like the rest of the stock market, but we'll have to remain to be seen, and we'll take a look at that. And we'll keep an eye on copper, because if copper breaks above $4 a pound and the rest of the stock market's taking out, it's going to be really difficult for the Bradley model to be right this year, because it's just going to be a case where it just didn't work this particular time. But boy, I'll tell you, if you had to write a textbook scenario for the Bradley market working, this would be the kind of thing that you'd want to be watching. And I think it's important that we keep an eye on that. Now, we haven't talked much about the U.S. dollar lately, and I think it's important that we keep an eye on this, because we're in a real tight area now where the dollar has made the 786 retracement on the upside. And what we want to do now is to see if it can, hold this level of 81.20 is what the 786 retracement came in at. And what we're looking for is a possibility for the dollar index to come down to this 77.50 level, and that would set up a very bullish, Gartley pattern to the upside. So this is what we're watching for the U.S. dollar. We would like to see, we're down 5 days in a row now, so we're correcting some oversold conditions in the dollar. But frankly, it looks like we got a chance to make that 77 level in the dollar. That would get that probably get the euro up to that 136 level, if it can in fact do that. And we'll have to wait and see, if in fact this is going to happen. But this is something that history will tell us whether we're right or not when we get to that particular point. Okay. Oh, someone had a question about his. This was a funny one. They said, "Are you taking a break because you're afraid of being wrong?" Oh my God! If I took a break for every time I was wrong, I would never work, because you're wrong a lot. The thing is, you got to realize when you're wrong and try to correct it. No, I'm taking a break because I want to enjoy myself if I'm right on this. And like in 07 and 08. In 09, we made a big move in these things, and I think we got something similar coming now. Why it would happen, I'm not sure. All I can say is the patterns are there, the cycles are there, the psychology is there. I don't know if it's going to happen or not, but this is something that I want to see if it does. I just want to focus on that particular thing. This is what I really want to do. So we've got to take a little break here. We come back. I want to take a little bit more time with the U.S. dollar, and then we want to cover the bonds.
At Tiger Metal Exchange, we pay you more for converting your jewelry to cash.
Let's go to Brian in New Jersey. Hey, Brian, what's going on?
Hey, Tom, just want to let you know I did give you some jewelry. My jeweler offered me about $650. Let you get a check in the mail tomorrow for about $1,200.
At Tiger Metal Exchange, it's all about honesty when converting your jewelry to cash.
Okay, let's go to Paul in Florida first. Hey, Paul, what's going on?
I want to commend you on the Tiger Metal Exchange. I just did a deal with you guys the other day.
Oh, good.
And very happy.
Well, I appreciate it. Now, did you sell us jewelry, or did you buy coins off us?
I sold you jewelry.
Okay.
Yeah.
Awesome.
What we weighted that was less than you guys said, so, you're totally honest.
At Tiger Metal Exchange, we give you the tools to value your gold, and it's absolutely free. Call 866-618-8888 or log on to TigerMetalExchange.com. We've created the easiest, safest, and most honest cash for gold process. Tiger Metal Exchange. It's the only call you need to make.
TFNN is proud to bring you the cutting edge of investment newsletters. Ken Shreve's Ultimate Growth Stocks. Ken is a top-down investor who lets price and volume in the major stock indices tell him when to be in the market and when to be out. By using his unique blend of fundamental and technical analysis, Ken will protect your hard-earned capital while realizing breakout gains. Go to TFNN.com today, click Investment Newsletters, and get Ken Shreve's Ultimate Growth Stocks free for 2 weeks.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Here's what people are saying about Tiger TV.
Let's go to John in Tampa. Hey, John, what's going on?
Hi, Tom. How are you, sir?
I'm doing great. You having a good day out there?
A wonderful day. I love your Tiger TV. I watch it every day. I'm like a kid in a candy store.
Oh, man, I appreciate you out there watching it. How long have you been watching the Tiger TV?
I'm watching almost a month now, and it's wonderful.
It's pretty cool, isn't it?
Oh, yes, it's cool. You see the charts and everything. Thanks so much for the hard work.
Tiger TV, a great news service from TFNN.com.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Okay, we're back, folks, and I'm talking about the euro right now versus the U.S. dollar, and we just missed the 61% retracement last night by about 10 pips on the upside at that one near that 133 level. And so what we want to watch now is to see how the market corrects from here. I believe that if the dollar weakens a little bit more, we got a chance to bust out to the upside, which would take us to the 136 level. If that does not happen and the dollar index starts to rally from this level, and it's down 5 days in a row, so a rally is not unusual, that we could move up and we could get a move down to the euro down to the 126 level. So those are the two time periods. I know that's a big wide range in the euro, 136 to 126, so it's probably the best thing in the whole world to trade because it's the most liquid of anything we trade in the whole world. And so this is why we want to look at it. I want to spend some time now with the bonds. I've only got a few minutes left, and I need to cover the bonds because we're at a very critical level in the bonds. This week we took out the low from October of last year by just one tick. And so this is what happened with silver. If If you remember when silver took out the low at that 26 and change a few months ago and then had the huge rally, we have to watch bonds here for a potential rally because it took out those lows. Nothing really happened. And if you look at the chart, we've been in a pretty wide trading bands between September and where we are now. So that's 7 months that we've been in this trading range. And so what we want to watch now is if the market can come out of here. I don't know if it's got a chance to go up and make that 149 level again, but we live in interesting times here, so any of these things could happen. So I'm saying that I believe we got a chance for the bonds to rally just because they're oversold. We took out those lows. Now the T-notes did not take out those lows. It only went down to the 78% retracement of the October low. So that means that the interest rate, picture on the short term, the notes are 5 years or less. Those are the ones that have held up, and so short-term rates are still relatively low, whereas long-term rates have increased a little bit. So we'll have to see what history says about this. But you want to right now, if you have to pick a side on the bonds, I would pick the side of being long right in here. But if we go below 135, folks, this thing is really going to melt down, just like we did below 140. It's going to be interesting to see, what really occurs. The main thing to listen to, most of the den people that we have, and also the Tiger TV, is, please keep an eye on what happens over these next couple of days. We have the Combust today. We have the new moon tomorrow, and and then this is a real critical week. If we close down for the week, in other words, the Dow Jones closes lower and the S&P closes lower, I'm not worried about the NASDAQ because that's basically Apple. But if we close lower, the New York Stock Exchange Index and the Dow and the S&P close lower for the week, that's going to pretty much say that all you need to do is to put your stop about 1% above last week's high, and let the cards fall as they may, and we'll see if it's going to work. But if it does, you want to hang on for quite a while, because this thing is going to be a chance for a major move in stocks, and it'll catch a lot of people off guard because of the VIX index and the fact that there's 2-to-1 bulls versus bears, which is itself, very, very unusual. But we'll have to see what's going to happen. And I hear the story all the time about the money moving from bonds into stocks, but frankly, that happens all the time, and I don't know if it's relevant or not. It might be. I'm just looking at the charts, folks. I'm not trying to say that I'm an economist or anything. I'm just looking at the technicals, the way I see them, and that's really what I'm looking at. So this is a time where it's very critical here. I believe we're at the mirror image of where we were in March of 2009. When it was down, it went up. Now I think we're up, but we go down. Thank you very much, folks, and I'll be on the show tomorrow, and may God bless.